Hello again, this is Robert Schein, Managing Director and Partner with Blanke Schein Wealth Management. Again, for all the clients, friends, and family out there, we constantly get tremendous feedback from you guys. So this is an extremely effective communication tool for us. Sort of give you a picture preview into our thought process, what we're watching, what we're following, insights, and sort of making sense of this upside down world as it relates to markets, investments, and so on and so forth. So thank you and keep watching. So recapping, even on the heels of last week, one of the things we want to look at is OPEC. And actually, they actually created a truce this weekend, if you will, came to terms anywhere from 10 million barrels to 20 million. Those details actually are yet to be sorted out as in terms of their total production cut. There's a lot of different news sources that are still trying to source the actual net take-home, net effect to the oil markets. That's a net positive. We previewed that as something to keep an eye on, and actually they came to terms over the weekends in OPEC. So that's a positive going forward. But bigger picture stuff for us to keep our eye on is, I keep bringing this up, volatility is going to return. We are going to continue to see this bottoming process as the markets work through the injection of liquidity, the stimulus that is working its way through the system, so fiscal and monetary policy. Again, we talked about oil. Those three things by themselves are just huge. And it's going to take the S&P 500, as we watch from a technical analysis standpoint, to create sort of highs and lows. And as we make market bottoms, we're still going to continue to test and retest, not necessarily the previous bottom, if you will, but it wouldn't be uncommon from a point in time right now, as we just had a big up week last week and a big down week the week before, to sort of see the market sort of flip back and give some of the gains back, and sort of retest, not all the way down, but there are ranges. The high range that we're looking at in the S&P 500 is 2,800 to 2,900. Again, we're about 2,700 right now. And the low range that we could see the S&P sort of trade into, again, is the 2,450 to 2,500 range. So there's a high and a low where, we're not the previous high. We've got sort of some time to get back to that over the months ahead. But in the meantime, we've created a consolidation from a technical structure, if you will. And so we want to see the S&P 500 stay within that bandwidth. Again, the 2,450 to 2,500 range on the S&P on the low side, which is about 10% less than where we are right now, to the 2,800 to 2,900 on the upside. So we could see us going back and forth for the next weeks and months to come as we grind through this. Now, there's still going to be tremendous opportunities as we see this volatility persist. And then there's going to be some things that we can take advantage of. So this is more or less of a trading market that we see, but we're going to stick to our plan, as we always do, our investment philosophy. And we encourage everyone to do so as we grind our way through this market. But we're seeing some positive signs and some constructive sort of technical factors that we're looking at. So that's the S&P 500 and technical analysis that we're looking towards. The SEC now has changed the rules going forward on a temporary basis, essentially asking for the CEOs on their reporting and providing guidance to be as transparent and timely as possible. So they basically said, you're not going to go, there's not going to be any securities violation if you basically say, what truly is happening with your business at this moment in time. That's welcoming because we do need to know what's going on, especially as we start to reopen in the next months and quarters to come, reopen the economy. I want to know when a CEO happens to say, yes, you know what, we've got 50% of the workforce back, or 75 or 100%. That gives us an indication of future sort of earnings and opportunities. So that's very important to us. Now, the flip side of this, and I really want to stress this point, this is going to be the most important thing that I think I say all this video podcast today, is that being said, so CEOs are allowed to basically speak the truth and really provide guidance. What do you think their guidance is going to be? Their guidance is going to be the worst you could ever imagine, right? Even if you're a good business and you're going through a tough time, you're going to give the worst guidance ever. If you're a bad business and you basically don't even know how to report the quarter, you're still going to say, oh gosh, this is sort of an opportunity for me to say, hey, yeah, it's because of the COVID-19 outbreak. For us on the internal investment side, we sort of sift through that. That's our job to do, sort of pick the winners and losers. But ultimately, what that means is that the headlines of the day, all of our friends in the news cycle are going to love this going forward. They're going to use this to scare all of us, saying that the United States is never going to get out of this, that the capitalism is over, that corporations will never make money again, ever, like ever. And it's really going to be a headline sensation. So I want you guys to sort of see through this as the markets see through this. Corporate CEOs are going to basically project the worst, okay? But again, the market's going to work its way through this. So stay true to the facts that are out there. And I'm telling you this now, first and foremost, so that when this does happen, it's not a shock or a surprise that we see this on the evening news. But ultimately, that's actually a turning point in the market, and that allows and frees up corporations to sort of level set expectations on a go-forward basis, so that now when they actually do surprise on the upside, they sell one or two widgets more, or they happen to execute on a business strategy that plays out better than they expected. You often see markets really celebrate as a result. So just keep an eye on that. I think it's very important.